as a day trader, having a red day, having a loss is a very common thing. It's part of day trading. You're gonna have green days, you're gonna have red days. But the big question that a lot of people want to know is, how much should you lose? What should be your maximum loss? We're gonna break down the perfect equation to figuring out what your maximum loss should be as a day trader right here in this video. So make sure you stay tuned. What's going on, guys? Today we got the red light going on behind us because we're talking about losing. We're talking about having red days. We're talking about the idea that you might possibly lose money as a day trader. First off, day trading is difficult. Day trading is hard. It's not easy. If you're going to give up after the first month, you might as well go ahead and quit now, because that first month's going to be very, very difficult. Maybe you get lucky the first few weeks day trading. Maybe you end up losing all your money in the first few weeks. You never really know. But you have to be able to accept one thing, and that's accepting that you could possibly lose money, right? The idea that you're going to just make money every single day and never have a red day, it's not very realistic. It's not a realistic idea. Can you minimize your red days, keep your red days small? Yes, you can very much do that, but still, you're going to have red days. What stops you from having a massive red day or having a small red day? What is the big difference between that? Let's kind of think about, how can you manage to keep your loser small? How can you manage to keep your winners big and all of that? Let's focus on the equation that everybody wants to know. What should be your maximum loss? What's your maximum daily loss as a day trader? A lot of people think that it's based on account size, that if you have a $100,000 account, your maximum loss should be 1% of your account. If you have a $10,000 account, it should be 1%. That 1% should be like, oh, that's what I'm gonna, look to not go lower than. I'm not gonna risk more than 1%. The problem is, when you're trading, the percentage thing is kind of skewed. Like, you can't just say like, oh, 1%, that's what I'm gonna do, because it depends on your overall equity, your balance, and things like that. You could have a $500 account, and if you're making, $500 every day, well, then your maximum loss could be $500, really. The simple equation, X plus Y equals Z here, X being your winner, Y being your loss, and Z being what your max loss is. If you have 5 days in the week and you consistently make $1,000 every day and you have a $10,000 account, first off, congratulations. That's amazing. If you're hitting $1,000 days for 5 days straight with a $10,000 account, congratulations. The thing is, with futures, you can do that. You don't need a massive account to do that. Let's focus on a couple things for you. Your daily winner consistently is around $1,000. Perfect. You know what your daily winner is. So why is it so hard to understand what your daily loss should be? If you're making $1,000 every day, there is no reason, well, not even no reason, but like there's absolutely zero reason that you should ever go over that in terms of loss. If your normal winning day is $1,000, well, obviously you should never lose more than $1,000 in a day. Realistically, you should have your maximum loss on the day around half of your normal profit. Monday, you make $1,000. Tuesday, you make $1,000. Wednesday, you lose $1,000. Thursday, you make $100,000. Friday, you lose $1,000. You lost $2,000. You made $3,000. You're still walking away with $1,000 profit that week. The goal here is to keep our losers always smaller than our maximum consistent kind of profit days. Obviously, we're going to have days where we might make way more than our normal profit, $1,000, $2,000, $3,000, whatever that is. But to really figure out your maximum loss, you should be focused on like, what's your consistent kind of profit. If you've got a $1,000 account and you're consistently making $100 a day, well, then you should never lose more than $100 a day. This is like the most simple equation to think about what should be your maximum loss. Like, I don't know why people are so confused on what your max loss should be. It's not based on how much money you have in your account. It's based on how much money you make. If you're consistently making $300 in your account and you have a $5,000 account, you're making $300 every day, and then you have a red day. Okay, perfect. Like, what should be your max loss? $300. If you're making $300 a day, there is no reason that you should ever lose more than what you're winning in one day. Let's say you make $300 Monday, you make $300 on Tuesday, you make $300 on Wednesday, and then on Thursday you lose $900. You just lost 3 days of profit. The goal here is to not ever lose more than 1 day profit. What that's going to allow you to do as well is keep your emotions in check, because you know, look, Monday I made 300, Tuesday I made 300, Wednesday I lost 300. On Thursday, what am I going to do? I'm either going to lose 300 or I'm going to make 300. And I'm going to focus on what? Doing what I do every day. If I make money 3 days a week and then I lose money one day, I'm not broke, right? Like, I'm not going on tilt. I'm not losing everything. I'm not blowing up my account. And that's the big thing here, is keeping our losers in perspective to our winners. And I see this all the time, where people talk about how, like, hey, you know, I made a couple $1,000s this week, but then I lost 5,000 on Friday. If you're losing all of your profit in one day that you took all week to make, like, you're doing something wrong. And you have to be able to walk away. Like, that was one of the biggest epiphanies for me as a day trader, is putting a maximum loss on my account. You can do that with almost every broker. You put your maximum loss, no matter what, you hit that loss, you're done. The broker is going to cut you out. It's over. You can't trade anymore. What this is going to do is it's going to stop you from blowing up your account. It's going to stop you from going on tilt, because the next day, if you lost 300 on Wednesday, on Thursday, you're like, well, all I got to do is just do what I normally do. Like, if I make $300 like I normally do, my normal kind of consistent profit area, making $300, perfect. I'm going to make $300 a day. That way, it's like Wednesday didn't even exist. Every day, we just go into it with the same plan of like, hey, today we're going to make this amount of money. Yeah, you know, I'm always trying to aim for more. Like, I would like to make more than what my profit target is. Not that I want to have a profit target, but I obviously want to make more. What are we consistently making? You know, if you're only making $100 a day, that's totally fine. Like, congratulations. Like, it's green, you're making money. That's what you want to be doing. You can always scale up. You can always learn, always become better. But you should never lose more than $100 a day. If you make $100 on a Monday, $100 on Tuesday, you shouldn't lose $500 on Wednesday, because now you just lost way too much. It's going to create too much emotion. You're going to go on tilt, and it's going to make it just much more difficult to get back to green on that week. And it's okay. Like, you can have multiple red days in a row. But again, it's like, if you have 3 red days in a row, totally fine. Like, that's okay. As long as you're not letting those 3 red days become larger than what you're normally making as a profit. Like, it's such an easy equation, such an easy idea here. I see people all the time in the chat. They're like, man, I lost $4,000 today. And I'm like, well, what do you normally make? And they're like, well, you know, on a good day, maybe $300, $400. So you lost like 10 times what you normally make on a profit day, on a losing day. Like, that is not good business. That's a terrible business. Like, you're going to end up going out of business, right? If you're a business and on a good day, you make $100 in revenue, and then on a bad day, you end up losing $3,000 in expenses, like, that business is broken. That's a bad business. Instead of worrying about how much money you have in your account, focus on only one thing. How much money do you normally make? What is your normal profit target? What is your normal profit day? You know, if you're green 3 days in a row, well, how much money did you make on those 3 days? Did you make $200, $300, $400, $500 every single day? Perfect. Well, now you know that whatever your normal winning day is, whatever your normal profit day is, you can't go above that in your losing days. Keep your losers at least 1-to-1. Don't ever go above 1-to-1 on a losing day. Like, just don't do it. It's going to ruin your overall thought, your mental, the emotion, all this stuff. And it's going to make you go on tilt. It's going to make you blow up your account. It's going to make you do bad things. So look at your normal winning day, and then that'll figure out what your normal losing day can be. It's part of the process. It's part of being a day trader. You're going to have winning days. You're going to have losing days. But the thing is, we never want our losing days to grow bigger, you know, than our winning days. We don't want our losing days up here than our winning days down here. You'll never be profitable. There it is. Really simple idea how to figure out what your maximum loss is as a day trader.